Greetings, everybody. Welcome to the weekly economic update. It is Monday, October 10th, 2022. I apologize for being out last week. I had a bit of a cold and was not very presentable for doing videos. Still a little froggy at the moment. And last Friday, I wasn't eating enough last week and was drinking way too much water and got my electrolytes all out of whack. So then I had to go to the hospital to get to get everything back to normal because I was all cramping up. And anyways, but I'm okay now. So if anyone was worried about me, feel free to send me a note. I certainly enjoy hearing from everybody. But anyways, I was watching the market and working last week. I just, like I said, did not feel up to being personable and friendly on the video. So anyways, but another down day in the markets, not down too bad, but we're going to go through the weekly economic update, some details from the monthly update that came out over the last week, and we'll go through today's market recap. So we'll keep it pretty brief, and but let's go ahead and jump into everything and see how everything did. Right now, the Dow Jones finished down today 0.32% or 93 points, closed at 29,202. S&P 500 was down 0.72, closed at 3613. Refresh just make sure all these numbers are accurate. NASDAQ was down 1.04%, closed at 10,542. Small caps were down a little more than 0.5%. The VIX up 3.86%. It's currently sitting at 32.57. As most of y'all know, anytime the VIX is over 30, that is a little worrisome as far as the volatility. And but again, with everything going on, certainly not outside the norm right now. Canada was down 2.09%, Brazil down 0.33%, Mexico down 0.57%. Jumping over to Europe, Germany was up 0.07%, UK was down 0.45%, same with France. The Euro stocks was down 0.55%, Netherlands was down 0.91%, Spain down 0.31%, Italy up 0.05%, so basically flat. Switzerland down 0.45%, Portugal down 0.78%. Moving over to the Russian markets, the MOEX down 1.43, the RTSI down 4.1. Headed over to the Asian markets, Japan was down 0.71, Australia down 1.4, New Zealand down 1.99. Right, headed over to China, the Shanghai was down 1.66, SCSE component down 2.38, China 50 down 2.48, the DJ Shanghai down 1.96. The Hang Seng down 2.95 and the Taiwan weighted down 1.37. So mostly a red day across the globe here for the 10th of October. But again, not all that fantastic. We can take a look at the Dow chart here. We can see starting here at the beginning of the year, again, we've continued to follow this downward trend line since we broke through the last line of resistance here in August. Pretty much been in this downward trend. We've had a couple of uptrends that have been fairly short-lived. Again, if we kind of scroll out, my personal best guess on where things will bottom out is probably around, at least in the Dow, around 18 to 20,000. So we got a little bit of a ways to go before we bottom out or capitulate here in the market. So don't be shocked if this trend continues for a while. So. All right, well, let's go ahead and read through today's weekly economic update. Excuse me. Week on Wall Street, a powerful two-day stock rebound cemented a positive week for investors as a new trading month began. The Dow Jones rose 1.99%, while the S&P 500 added 1.51%. NASDAQ was up 0.73%. And internationals gained 3.42%. So strong for internationals starting out the month. Stocks opened the week posting their best two-day rally since March of 2020 as the UK Prime Minister's decision to reverse a tax cut proposal that had upended financial markets the previous week lifted investors. Falling yields further lifted investor enthusiasm, as did new economic data indicating a cooling economy. Losses in the last 2 days erased much of the gains as concerned about higher rates and recession once again moved front and center. The selling pressure was due to a stream of hawkish comments from Fed officials and labor market data that suggested the Fed would likely stick with its rate hiking plans. So I think we talked about this the week before that the UK was kind of stopping their tightening of their economy, trying to ease things on their end, but we really need to continue to stay the course. Yeah, it might feel good in the short term, like it did 2 years ago when we created all that stimulus and the market roared back really, really quickly. But we can see right now the consequences of those actions are, a market that is floundering and probably going to bottom out at, somewhere 40 or 50% loss from peak, which again is fairly typical. All you got to do is go back historically and look at the trends when we go through these downturns. So again, don't be shocked. All right. Mixed labor picture. Employment-related reports offered conflicting signals on the state of the labor market. In a sign of cooling, the number of open jobs in August fell 10%, while subsequent report from ADP showed continuing labor market strength. ADP reported private employers added higher than anticipated 208,000 jobs in September, and annual wages rose 7.8% from a year ago. Jobless claims rose to 219,000, up from the previous week's 190, and in line with 2019's average. September's employment report showed that employers had added 263,000 jobs, slightly lower than expectations. The combinations of new hiring and labor force participation led to a drop in the unemployment rate to 3.5%. So that's some good news. Economic data coming out this week. Wednesday, we have the producer price index. The FOMC meeting minutes will come out. So we'll read through and see if there was any interesting tidbits that we hadn't already covered in the last couple of weeks. Thursday, we have the consumer price index and jobless claims and retail sales on Friday. Companies reporting earnings this week. Wednesday, we have Delta and Pepsi. Thursday is Wells Fargo, Walgreens, BlackRock. And Friday, we have JP Morgan, United Health, Citigroup, Morgan Stanley, PNC Financial, and US Bancorp. So, all right. So again, it's not the end of the world. We go through these downward cycles. Granted, it had been, over a decade since the 2008 and 9 market downturn, but certainly not anything to get too worried about. All right. Well, let's go ahead and review some of the deets here in the monthly economic update that's going out to those on my mailing list. Let's see. For the month of September, the Dow Jones dropped 8.84%. The S&P 500 fell 7.95. NASDAQ lost 9.13%. Obviously, inflation is still a bugaboo right now. As far as the sector scorecard, it looks like everything was pretty much down from, consumer services was down almost 12%, consumer discretionary down 8%. Most of these were down, high single digits, a few double digits, like real estate was down almost 14, technology down 12.35, utilities down almost 12. So September was not a good month for the domestic markets altogether. In world markets, the MSCI lost 10.06%. In European markets, Spain was down 6.5%. France was down almost 6%. Germany fell about 5.61%. In the Pacific Rim, Hong Kong lost 13.6%. Australia was down 7.3%, and Japan was down 7.67%. So across the globe, most things were just not really, really good. So I'll go in. We cover most of this stuff on a daily basis, so I'm not going to read through everything there. All right. Well, let's go ahead and read through today's market recap, and then we will be out of here in just a few minutes. S&P 500 slips as Rout in chip stocks weighs. The S&P 500 fell Monday, driven by a chip-fueled decline in tech after the White House unveiled new export restrictions on U.S. companies selling semiconductor chips and other chip-making equipment to China. Fresh U.S. export control restriction aimed at stopping Beijing's chip-making abilities and advancing its military capabilities sent chip stocks about 4% lower. Lam Research Corp, Coherent, and NVIDIA led the decline as semis, even as the latter said it didn't expect the new ban to have a material impact on its business. Big tech, Apple excluded, added to the recent losses, with Microsoft and Alphabet leading the downside as sentiment on tech remained under pressure amid fears that the Federal Reserve will deliver another 75 basis point rate hike next month in November. Quote, we continue to expect that the Fed will hike by 75 basis points in November, 50 basis points in December, and 25 basis points in February to reach its terminal forecast of 4.5 to 4.75%, Goldman Sachs said in a note. Fed Vice Chair Lael Brainerd said Monday that, quote, second half rebound will be limited and that real GDP growth will essentially be flat for the year, end quote. The slowing growth, however, doesn't appear to be dissuading the Fed from its path of monetary policy. The slowdown in economic growth due to monetary policy tightening is only partly realized so far, Brainerd said. Consumer stocks were also in the red, pressured by a slump in autos after UBS downgraded Ford Motor Company and General Motors on worries of demand destruction for automakers next year as supply will likely exceed demand. UBS downgraded General Motors from neutral from buy and cut its price target to 38 from 56, and Ford to sell from neutral with a price target of 10 down from 13. Rivian Automotive, meanwhile, fell 9% after the electric vehicle pickup maker said it will recall nearly all of its EVs due to a possible loose fastener in the vehicle's front suspension. Not good. Defensive corners of the market, including utilities and consumer staples, bucked the trend lower to trade in the green for the day. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. And I'll be back tomorrow with the Liberty Call. So everyone have a great evening, and I'll talk to you then. Bye.